question number one, how can I adjust my business so it is run in a way that is a little bit more consistent with maybe how an arm's length party would run it? And I guess what we're kind of looking at here is, sometimes I know clients at the firm here, there might be a bit of a blurred line sometimes as to, what is business, what's personal. Is there ways that you kind of advise clients to maybe clean up their operations to get them in a better spot for you to be able to provide those valuation services?
Yeah, no, that's a really good question. And it's kind of like the question implies, to run more like an arm's length party, just really think about, you know, if you were to buy a business from somebody, you
Hmm.
know, or if you had, an unrelated shareholders, if there's a group of shareholders, there's a lot of things you wouldn't do. You're not gonna
Right.
suddenly expense that trip to Vegas. That might have a very small business component, but otherwise, is generally for personal. Or you're not gonna, pay yourself double maybe what you would pay an arm's length person for that role. And we're not saying, it's your business. We're not saying, you can't take cash when you need to or whatnot. It's just, it's really just the optics around making it look like it's managed the way, a group of unrelated people would manage the business. So if you paid yourself a wage that's representative of, if you had to go to the market and hire somebody to replace you, what would you pay them? If you really made a strong emphasis or tried not to include expenses that are discretionary. You're not including, like I said, trips that probably aren't business related. You're not expensing, a lot of meals and entertainment that really aren't, required for the business. And you're not purchasing, a ski boat in your company and on the basis that you use it to entertain a few clients and therefore
Right.
you can justify the business use. That's an extreme example, but all those things when it comes time to sell, when you're showing a potential purchaser, this is how much cash flow this business generates, and to get to that number you have to make 10, 15, 20 adjustments. It raises a lot of uncertainty, and it kind of puts people's puts a bunch of red flags up, and now they start wondering, is this business as good as you say it is? You have to do all this stuff to arrive at the number that makes it worth what you're asking. Whereas, especially if you're thinking of selling in the next 5, 10 years, by managing it in a very transparent and arm's length way, it really makes it a lot more saleable. If somebody's going to buy it and they see, hey, that income statement is very clean, there's no discretionary items there. It's straight up business expenses. Assets, there's no kind of redundant assets, which we'll talk about later. It's just everything, wages are all at fair market value. You're not employing, 3 or 4 kids that aren't really working for the business, but all receive a wage. Just those things alone just make it more saleable. It makes it easier for somebody to step into your shoes and take over that business.
Right on. Yeah, I think that's a good point. I mean, beyond even just considering, certain expenses that CRA might even put in that gray zone, like you said, I think a lot of times these discussions, they initially start off maybe one party looking at another party's financial statements. But if you have to go from point A all the way to Z and make all of these adjustments for all these things, I don't think it really gives that purchaser a whole lot of faith in, the underlying numbers that you have there. And I mean, if you've got to make, like you said, a whole pile of adjustments to get there, is there something else that maybe you're not fully disclosing? You know, is this really just more of a way for you to kind of pad your personal lifestyle? And I think, like you say, if you clean out some of these things, you know, you might have the odd adjustment, whatever the case might be, maybe some owner's wages that are maybe slightly out of the norm. But, if you make those simple little adjustments, I think that puts a lot more faith in the purchaser and probably speeds up the negotiations in that process.
No, and that's exactly it. And just on a related vein, if there aren't so many especially if you're looking at selling the shares of your company, because, you know, maybe you want to take advantage of the capital gains exemption. You know, if a purchaser sees a lot of discretionary items, or like you said, gray items that, you know, CRA kind of toes the line, you know, suddenly they might not be interested in buying the shares. They're more going to look at buying the assets because, you know, they don't know in 5 years if CRA audits a year, they don't want to take on that liability of something that you did, but now, you know, they have to deal with. And so it could also, you know, eliminate that opportunity to vend your shares and take advantage of those that capital gains exemption.
Right. Yeah, and depending how that plays out, if you're in the market to sell your shares, and then based on, you know, having to make all these adjustments, you know, you're forced into kind of getting rid of the assets, that might be a significant tax bill that you were otherwise not expecting to have. Could impact the retirement plans or some sort of, you know, plans to move to the next business or something like that. So yeah, it's good to kind of keep things clean on the level and be transparent to ensure you're not throwing yourself a wrench down the road for sure.
No, no, exactly. Because at the end of the day, you know, a lot of people don't like, you know, don't realize it until they go to sell their small business, but it can be very challenging to actually sell a small business. And if you can make it as attractive as possible by, like we talked about, you know, making it as arm's length, as transparent, it just increases those odds because it's just the nature of a small business. They can be tough to find a buyer and then find a buyer with money.
For sure. Yeah, so it's always good to be prepared, ready to execute that sale. And if you're not doing the things and taking the steps to keep that business in check and all the expenses on the level beforehand, then yeah, you might be missing out on some of those opportunities. And if they don't come around too often, you might be left holding the bag down the road. So better just to be prepared than maybe push the envelope on some of these things. So perfect. I think that one kind of does justice on question one.